Well, to the markets, the all-share closing comfortably in the green this afternoon, more than 1% in the positive. The big gainers were miners. Nadir Token from SEI Investments joins me now. Nadir, thanks very much indeed for your time. First of all, I mean, can we get through what's happening with the rand at the moment? I mean, I think we're about 17 cents away from 17 rand to the US dollar. Now, dare I say, we've just seen those petrol price increases coming up. I wonder what's going to happen next month if that trend continues. But before we get into that, I mean, is this in any way connected to the load shedding domestically, or is this just what's happening internationally, people running to the US dollar?
Yeah, evening, Devin. Thanks for having me. And yeah, I mean, as distressing as it is to see what the rand is doing, obviously we know it's very inflationary to things like food prices, to things like energy prices. We just saw that massive petrol price increase last night. I think South Africans need to put into context that the global economy is in a very uncertain place at the moment. Inflation is a problem globally. We see it at a 40-year high in the US. We see it at a 30 to 40-year high in the UK. We're seeing accelerating energy prices all over the world. And on the back of that, there's significant concern that the global economy is going to be pushed into a recession. And on the back of that, there's massive demand for safe haven assets. And, there's massive shying away from risky assets. And unfortunately, in that sort of scenario, the rand is probably one of the biggest, one of the biggest losers in that sort of a scenario, because the reality is that we are a very, very liquid emerging market currency and a very, very liquid proxy for global risk sentiment. And over the course of the last 6 months, risk sentiment has gradually been souring more and more. We saw risk assets in the month of June off, some 11% globally, and certainly locally as well. We saw equities coming under tremendous pressure, and that volatility has continued into recent days. And ultimately, that's really what the rand is suffering on the back of, is all these outflows as money is flowing to safe haven assets, and very little South Africa can do about that. So, load shedding might fit the narrative that, the rand is weakening as we get load shedding. Certainly isn't helping the outflows from South Africa, but there's a much, much bigger picture at play here in terms of global sentiment.
All right, let's just talk about the general equity market here. I mean, we are seeing the equities not doing too bad, but I mean, of course, you look at the all share, around about 65,000. That's very far away from the highs we saw at the beginning of the year. So we've got a lot of ground still to recover. Shares are still pretty down from that huge knock over the last few sessions.
That's right, Devin. And all these fears that we just mentioned are kind of feeding into stock markets and risk assets in general coming under incredible pressure. It's really about avoiding volatility. It's really about avoiding cyclical assets. You would have seen, our bond markets kind of, also being fairly weak over the course of the last couple of weeks. And even if you look at the gainers today, Devin, it's really all about the gold miners. With all the global uncertainty that's about, there's an expectation for a stronger gold price, and obviously the rand has weakened tremendously. So the mining stocks benefit tremendously from that and feed into the inflation narrative. Those commodity prices are ultimately what's driving inflation at the moment in terms of that cost push. Today's market moves certainly seem to indicate that, that's really where all the strength is coming from. So ongoing strong volatility, as you mentioned, Devin, struggling to really get ahead of or get back to those highs that we saw earlier this year amidst all this global uncertainty and next move from central banks.
Let me ask you this very quickly. I mean, just back to the petrol price and fuel increases here. I mean, we were talking yesterday about the fact that it's not exclusive to South Africa. You see what's been happening in Ecuador with the finance minister resigning. We know what's happening in Sri Lanka. The UK is not immune to this. Global energy prices are stifling the global economy at the moment. I mean, this is not a South African phenomenon, is it?
It's not at all, Devin. I mean, just to put it into context, energy prices in Germany are up fivefold, off of their lows. And energy prices in the UK are up threefold. I guess the difference in those countries, Devin, is that the consumer is in a much healthier state. Yeah. And even within the US, there's 2 job vacancies for every job applicant. So they don't have the same problem of unemployment. But certainly, to your point, energy prices all over the world are crippling the global economy and, potentially pushing it into a recession. We saw the World Bank downgrading their forecast for growth for 2022 from just above 4% to now under 3%. And essentially, input cost inflation and energy price inflation is a major reason for that downgrade to global economic growth.
All right, we'll leave it there. Thanks very much indeed. Nadir Token of SEI Investments chatting to us about the markets there.